So in today's Trade of the Day video, we're going to take a look at the S&P 500 and a recent buy and then a short trade coming straight after. So let me just zoom in and we'll have a look at these recent trading opportunities. Now, a couple of things I want to talk about here is, so look, there's two ways that we do this here. One is that when someone's new to Trendsignal, so a beginner Trendsignal member, shall we say, then what we're looking for principally are these sniper discs to identify a trade. So you can see trade number one is a buy trade or a long trade. Trade number two is a short trade there, okay? And it's quite clear to see that trade number one, there was the entry, that's a loss-making trade. Trade number two, really nice short there, fallen quite heavily, it's a nice winning trade, okay? So that's simple enough. The question is, what can we know and what can we learn from this, and how do we teach our members to be able to determine that actually this, trade number one, is a riskier trading opportunity? Well, that's what I want to talk about in today's video. So what we've got here, like I said, is a buying opportunity that's coming through here. Now, what you've got to look at is the memory and what's already happened. So when you look at a particular trading opportunity, a brand new member is going to be looking at just the snipers alone until they build up the confidence to be able to look and take on additional factors. Now, much like any golfer is going to try and assess whether there's water or out of bounds or bunkers or how tight the fairways are and so on, traders need to be able to do the same sort of thing. So rules will take us so far, and that's great. There's been some fantastic results on those rules, but of course, that makes for a pretty boring video. And what I want to do is take us through how we can help our members to identify a higher risk, a lower probability trading opportunity just by taking a look back over the previous sort of week, 2 weeks to see the context of the move. Now, what I'm going to look at is this number here, the 4160. So what's happened is the market's gone up and then it started to back away. And that dotted red line there is basically what we call a pivot point. This is the key price. 4160 is the key price from which the market rejected the highs here. The market then started to come back down again. Now, ordinarily, I wouldn't mind too much about that on a buying trade, but what did we see happen? As the market then started to go back up again, before we had the buying opportunity, in fact, the day before, the market here had a look, had a little sniff up to the highs before being whacked back down like a naughty little schoolboy right back below that resistance level. So effectively, that pivot point is resistance. It's resistance that was found a couple of weeks ago. Now, if we'd have torn straight through it, I'd be absolutely okay with it, no problem whatsoever. What we have found, though, is that we're approaching a buying opportunity where the market has already found resistance at this level, okay? So we're about to buy into something that is literally just above our heads. So if you think about, if you're going to jump up, in your room and you're about an inch from the ceiling, you're going to hurt your head, right? So, obviously it would be a silly thing to do. Now, as a brand new member, we're just going to focus on the snipers, right? And that's fine. But actually, as you develop those skills, you'll start to look at where those low ceilings are and where those potential problems might be. As in, what might prevent this trade from going on to be a profitable opportunity? And in fact, what actually happened is the next day, the market hit that number pretty much to the tick, and then it came spinning off. So what can we learn from that? Well, look, effectively, if I've got a resistance level so close to my entry, just above my entry, then really it makes it a lower probability opportunity and perhaps one that I'm interested in or more likely to avoid. Now, if there's enough scope up to that ceiling, then actually I'll be more interested to take the trade, but probably with a slightly tighter target maybe. But in terms of this particular opportunity, really close to resistance that has already been found on the day before, rendering this a lower probability opportunity. What then happened was the market, as I said, he hit that resistance level, then span off, leading to a short. So that whole sort of area was deemed to be a very strong resistance area. The sellers then started to take control. The market moved into a position of lower highs now. It was higher lows. Now it's lower highs. It's starting to break back down. So effectively the pattern was like this, but now you're starting to see this happen here. So this is the short trade. The market's put in a lower high from there, and now it's breaking back down. That gives us a short trade, and the great thing about this is absolute free air all the way down to here. Now you understand that our starter target for our new members was about 40.57. So it was a really nice profit of about 200 points, hit that target quite well. the major support level was back down to that level, and it hit that level 2 days later. And that was at about 700 points away. So some really nice moves and really interesting bit of analysis I hope you'll find there is that, from a member's perspective, when they join Trendsignal, we focus on the snipers, which is a proven rules-based approach to trading that's been looked at over the last, or analyzing thousands of trades over the last, 12 years or so. However, as you become a more experienced trader, the goal is what can we do to try and perhaps remove some of the riskier, or identify and trade accordingly some of the riskier trading opportunities. This one, absolutely the case. Buying just shy of resistance that had already been found, already found a reaction to it, makes it lower probability, therefore more likely and better to be avoided, or perhaps traded in smaller size or smaller targets and so on, treated accordingly, shall we say, and then the short trade coming through from there as the market rejected that level, taking us into a really nice downward move and a really nice profit for that opportunity. So there we are. That's today's trade of the day.